What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going to go over why NIO is down so much today. And looking at the chart, they're actually down right around 8%. And so we're going to go over exactly what has caused NIO to pull back so much today. And it has to do with NIO actually raising some capital, and that could potentially happen next week with a stock dilution. So we're going to get into exactly how that's going to affect NIO and how that's going to affect you as a NIO investor if you currently own shares of NIO. But before we actually get into the video, if you guys wouldn't mind going down and hitting the like button, it really does help out the channel and it lets me know that you guys enjoy these stock updates every day. So again, if you guys wouldn't mind hitting the like button, I would really appreciate it. Now, like I mentioned, NIO is down right around 8% today, and this is coming after they mentioned that they're going to be doing a stock dilution next week at some point. Now, we know the past week or two, NIO has been having a pretty rough time, and they've been in the red for about the last 2 weeks or so. And a lot of this red has actually been from news about other EV companies like Li Auto, XPeng, and Tesla. We know that there was quite a bit of negative news for these other companies, like XPeng being downgraded from a buy to a neutral, Li Auto doing a stock dilution, Tesla announcing a stock dilution. So there's all kinds of things that have been negatively affecting NIO, and this is really the only news specific to NIO that has affected their share price. All this red that we've seen for NIO the past few weeks has been from other EV companies. Most of the red that we've seen has not been from NIO specifically. Now again, the reason why NIO is actually trading lower today is because they actually announced a stock dilution. They're going to be issuing about 60 million shares in a new offering next week, and it could be anywhere from 60 million up to 69 million new American depository shares. And for those of you who don't know exactly what this means, it means that NIO is going to be putting out more shares to the public, and in return, they're going to be raising about $2.8 billion. And for those of you who are worried that this might be a negative thing for NIO, because sometimes it is for different companies, they will sell shares to get out of debt or something like that, but we know that NIO isn't short on cash. The entire goal of this offering is to raise more cash to put back into the business, which in turn should raise the value of NIO's company, and therefore shares should be worth more in the future, even though there would be more shares. So as of right now, NIO has about 1.08 billion shares outstanding. So again, those are shares that are being publicly traded, and that's the amount of shares that are available right now. Now, once NIO completes the secondary stock offering, there's going to be about 1.14 billion shares outstanding. And so theoretically, this should decrease the value of each stock because the company is still worth the same amount, but there's more shares available to the public. Now, in the short term, this could very well be true, but the point of raising this $2.8 billion in capital is to invest back into the company and improve their technologies. Therefore, that should increase the value of NIO in the future, and those shares, even though there's more of them, they should be worth more per share. And what NIO has actually said that they're planning to do with this capital raised is they plan to use the new cash for a variety of corporate purposes. And some of these things include new product development, the development of self-driving technologies, and also to expand their sales and service network. So it's not like they're raising this cash to get out of debt or something like that. Now, obviously, NIO is not yet profitable, and they probably won't be profitable for the next couple of years or so, and probably at the minimum of 6 quarters, if not into 2 years. But the point of raising this capital, like I've already said, is to improve their technologies and improve their product development to get more vehicles on the road and to acquire more customers. Once they acquire more customers and expand their business, it's going to be worth more and shares will be worth more, even though there is between 60 and 69 million new shares. Now, it also says that NIO definitely plans to sell 60 million shares, but their underwriters, including Morgan Stanley, have the right to purchase an additional 9 million shares within 30 days. So that's where that 60 to 69 million shares comes in. And we know that NIO isn't the only one that's been doing this, because NIO's offering actually follows a similar trend to other EV companies lately, because we know Tesla, Li Auto, and XPeng have all done the same thing in about the last week or so. So starting off with Tesla, they announced a $5 billion raise earlier this week, and then it went to Li Auto, which raised about $1.3 billion last week. And then XPeng announced a $2.2 billion stock sale on Wednesday. And so because of all these secondary stock offerings from all these EV companies, these companies themselves obviously went down in price because that's very typical when a stock dilution happens. But because all these EV companies are sort of in a bubble together, I'm not saying in a bubble where it's going to pop. I mean, they're almost all one in terms of the way they trade. They all follow a very similar trend when they're trading. And so because these other companies have been doing stock dilutions the last couple of weeks, they've been going down and they affect the entire EV market. And so that's a big reason why NIO's been trading down the last couple of weeks. That combined with the negative news that's come out for these other companies recently, and it's no surprise to see NIO trading down in the red the last 2 weeks or so. And with this dilution that's going to happen next week, 60 to 69 million new shares, obviously it's drawing concerns for investors because they're concerned their shares are going to be worth less. And this is a very valid concern because when you put more shares out into the public, obviously the shares that were already there are going to be worth less because the company doesn't increase in value. Now, yes, long term with the cash that they're raising, they should be worth more in the future. But in terms of after a dilution happens, nothing is supposed to change. The company is still worth the same, aside from the cash that they're raising. But that's to go back into the business to increase the business in the future. So it's a very valid concern when a company puts out a secondary stock offering. And another thing that concerns investors is when a company does multiple stock offerings in a short period of time, it's definitely on the radar of investors, and they are thinking that there may be something fishy going on with a company that does multiple stock offerings. Now, I don't blame NIO. I think it's a good thing to do with all this hype around EVs right now, and it would be a good thing to sell their shares at a good price rather than undervalued because obviously that would not be worth it. So it's not a bad thing that they're doing this to raise cash to increase the value of the company in the future. But when a company does do multiple stock offerings in a short period, because we know they did it just a couple months ago, it does pop up on the radar of many investors and they think that there could be something going on that they're maybe not telling investors about, some pretty big news. Now again, I don't think that's the case with NIO. I think they're just taking advantage of the market right now and the positivity in the EV market as a whole. Because if I was the CEO of NIO, I would do the same thing with all the hype around EVs right now and all the growth that there's been. So it's definitely a smart thing to raise cash right now when the shares are worth so much. But now going back to their first stock offering that they did a couple months ago, and this happened in August, and they sold 75 million shares at $17 a piece. And between that stock sale that they did back in August and their closing price on Thursday, NIO rose 127%. And I'm sure when they did that original stock offering to raise some cash back in August, they weren't planning on NIO raising so much in price. They probably didn't think their share price was going to run up somewhere around 1,900% in the past year, which obviously has been crushing the returns of the S&P 500. And they've even surpassed Tesla by quite a substantial amount, where Tesla shares are up 790% over the same span. But maybe to kind of give you guys both sides of the story, some good and some bad news that could come out of this dilution. Obviously, the extra cash is going to help NIO grow by adding manufacturing and distribution capacity, because we know right now, and recently in the last couple months, NIO has had a capacity of about 5,000 vehicles, and they're working on upping that capacity to 7,500 by January, and they're maybe even trying to do it before the end of December, which would be in just a few weeks here. But if they can increase capacity almost every month throughout 2021 with this extra cash that they're raising, that's when we'll see their delivery numbers increase month after month like we've seen for the past few months. And of course, we know that battery costs have fallen in the last few months as well. And NIO is trying to take advantage of this, and the Chinese government has actually provided a lot more stimulus to produce EVs in their country. And so with the Chinese government backing EVs and NIO specifically, I think it's a good thing to raise a lot of cash right now when they have the upper hand and when they have all this government support. Now, on the other hand, the bad news is that the more outstanding shares there are, this means that there is some dilution for existing shareholders. Therefore, shares are going to be worth slightly less. Now, NIO has issued more than 10% of their outstanding shares so far in 2020. So it could draw some concerns for some investors, and they might think that there's something going on with NIO like I mentioned earlier. Now, generally, management likes to sell shares when prices look good, And of course, they don't want to sell shares when they're undervalued because they wouldn't get nearly as much cash raised. But again, with repetition of stock sales, this can be a warning to investors. So if this does continue, that could be a warning sign for NIO investors, and I would maybe start looking at NIO differently if this continues. Now in the near future, I don't think NIO is going to do any more secondary stock offerings, but if that does happen, there's probably something going on that they have yet to tell investors. But again, originally when they did that first offering in August, nothing really bad happened to NIO. Of course, we saw their share price pull back a slight bit when they announced that, but since then they've marched way higher and their shares have picked up a lot more, and they've even acquired more buy ratings since August. Now back in August, there were 7 analysts, or about 47% of those who cover the stock rated them a buy rating in late August. And now there's 12 analysts, or 67% rate them a buy. And the average buy rating for a comparison in the Dow Jones has an average of about 58%. So even with NIO's current standing and the way their share price is right now, they still have a 67% buy rating. And I guess we should wait until next week to see when these shares are added and see if any of these analysts adjust their rating. But my bet is that it's not really going to change too much, and we're probably going to maintain this similar rating even next week after these shares are added. Now, for those of you who made it this far into the video, I want to hear what your guys' opinions are on NIO adding more shares to raise more capital for their business. Do you think this is a good thing? And are you willing to have your shares worth a slight bit less in hopes that NIO is going to use this $2.8 billion to increase capacity and really ramp up their business going into 2021? Or would you rather they didn't add these 60 million shares and just keep NIO the way it is right now? So let me know your guys' thoughts down in the comments in regards to whether you think this is a good thing or a bad thing. In my opinion, I think it is a good thing because NIO is raising about $2.8 billion, almost $3 billion, even though right now they have a pretty decent amount of cash on hand to really ramp up that cash holdings that they have. And then going into 2021, with this raised capital they're getting, they can maybe even start producing more facilities and then leverage their partnership with JAC Motors and put out that 100 to 150,000 deliveries by the end of next year. So I think that would be a huge thing for NIO, and I think this capital is going to help them do that. And I think it should also help them expand to Europe next year, possibly. But again, let me know your guys' thoughts down in the comments about this stock dilution. Lastly, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. When you sign up and deposit $100, you'll get 4 free stocks. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one.